Hey everybody, Chuck Barone. It is Friday, October the 20th, 2023. Finishing up another week of crazy with the craziest yet, man. I'm telling you guys, these markets, they refuse to accept reality sometimes. And apparently that's kind of where we're at. Reality's setting in, these markets kind of correcting a little bit. Some fascinating developments today. We'll talk about all that stuff. Before I get rolling though, first of all, let me take a second to welcome everybody to the show today. We appreciate you guys being here. Of course, your support means the world to us. We appreciate you guys. I also want a quick apology for yesterday. Sometimes business comes along, guys, you know, and still working over here. So I was forced to miss doing the show yesterday. For that, I apologize. Anyway, let's talk about these markets today. So as we know, Powell had his little speech yesterday, affected the markets yesterday, and the hangover still today. No data today coming to offset Powell's speech. So the market's kind of digesting the fact that things aren't going the way they hoped. Market's correcting today, stocks coming down across the board, pretty big too. The Dow Jones falling 286 points, sitting at 33,127. The NASDAQ goes down 202 points, 12,983. And the S&P falls 53 points, 4224. A bloodbath across the friggin' spectrum on stocks today. I think the market's coming to understand that with all of the things that are brewing now, on top of the inflation, the Fed, the rate hikes, and everything else we've been dealing with, I think they're understanding coming now that these rate hikes will ultimately engineer a recession, and that recession is going to hurt earnings, and of course, earnings are what drive stock prices. So the market's starting to adjust to this reality. Still, though, everything is just so crazy. Because the market understanding that rates are going to go higher, be higher, stay higher. At the same time, don't want to believe it. So you got, as soon as they get any shred of news that they're done with rate hikes, the market rallies. You got the Fed, but even in Powell's speech yesterday, which I'm going to talk about, he talks out of both sides of his mouth too. So it's a very, very confusing time. As we've been telling you guys, be cautious with your investments. Play it safe right now, man. Better a smaller gain than a big loss, right? So the stock market today, not a place to have money. And it's just the way the week ends. Fourth straight week down for S&P 500. The bond market today, well, bonds the market tanked early and then rallied back. I guess some people bottom fishing. So the 10-year actually falling 6 basis points today, sitting at 4.92%. The 5-year falling 10 basis points, sitting at 5.0 or 5.07%. So now the yield curve continuing to flatten out like crazy. Now you only have 15 basis points between them. And for a while today, it looked like the entire spectrum of treasuries, from the smallest to the longest, were all going to be over 5%, and that's coming. Tough times for the bond market, this bond rout, the worst bond bloodbath probably in the history of the bond market. Bondholders, it's supposed to be a very safe place to put your money, and I guess it is if you're willing to hold to maturity, but bondholders getting killed. People who are holding longer-term debt of ours, the people that have been holding long-term 30-year stuff for a while or 10-year stuff for a while, getting smashed, man. Yikes. So the bond market, the yield's flattening out. It's going to be interesting to see where rates settle once the curve goes from inverted to back to normal. It's going to be interesting to see where this 10-year goes. The 10-year is the foundation, the benchmark, I guess, for pretty much every other rate. Everything goes off the 10-year, from mortgage rates to credit card rates and everything else. So that's going to be fascinating to watch. The dollar today, basically a flat day. The dollar's sitting 106.16 on the index. No real news other than this whole de-dollarization thing. We'll talk a little bit about China today at the end of the show. So the dollar basically still the king of the hill, still the strongest, still sitting at a very high number on the index. Precious metals today, gold and silver, decent day. Gold rallies up $6.30, $1,980.60 per ounce of gold. Gold bare almost touching $2,000 per ounce today. Silver rallies 33 cents per ounce, sitting at $23.34. So it looks like precious metals on their way back up. You're going to see 2,000 silver, 25, or 2,000 gold, $25 silver coming up soon. Oil today, down small, down 35 cents, but still sitting at a very high price, $89.02 for a barrel of West Texas Intermediate. Of course, oil prices were coming down. It looked like we were going to get back into the 70s till this Israel-Hamas Palestine thing starts up. Even though none of those countries are oil producers. The big fear, of course, is Iran getting involved, which would then bring in all the rest of the Middle East states. So that kind of war fear. What's China's demand going to be? Adding a lot of uncertainty to the oil market. So prices remaining a little bit elevated. Bitcoin today. Bitcoin continues to rally up $812, sitting at $29,599. Looks like Bitcoin poised to take another shot at 30,000. Well, actually, in spite of a lot of negative news in crypto, especially with this FTX trial underway, Bitcoin has held its own and continued to rally. This Blackstone or BlackRock, one of the other ETFs, going to be coming. When it does, it'll spawn a whole bunch of imitators, especially if it's successful, and you'll see demand for crypto jump pretty big time. All right, let's talk about Powell. Powell speaks. Powell had a speech in New York City, coming out, spooking the market, as always trying to create a shitload of confusion and succeeding. Let me give you a couple of quotes from Powell here, okay? Powell says, "Does it feel like policy is too tight right now? I would have to say no." Okay, so that, of course, implies that there's a little more tightening to do, and that rate hikes probably coming before rate cuts. It says prices are too high. Tell me, what is the Fed going to do to lower prices? Nothing. What they're going to do is, maybe if they're lucky and they don't kill everything first, stop prices from rising as fast as they have been. But the price increases we're already seeing, the Federal Reserve has no power to make those prices come down. Unless, of course, they want to completely crater the economy. Well, already worse than it is. I mean, let's face it, guys. Consumers are wiped out in this country. They got no money for nothing anymore, man. Everybody living paycheck to paycheck, impossible to save money. They want to spin that up to like American consumers are doing great because they're going further and further into debt. It's just a load of shit, man. This recession is basically already here for the poor people, almost here for the middle class, and of course the rich, they don't care. More Powell quotes. I love this guy, man. "While the path is likely to be bumpy and take some time, my colleagues and I are united in our commitment to bringing inflation down sustainably to our 2% target." All right, so let's take this sentence apart, right? "While the path is likely to be bumpy and take some time." So that means Powell understands there's going to be setbacks like the ones we've been getting month after month with jobs and inflation numbers and everything else the Fed's trying to stamp out, and going to take some time, meaning this inflation fight is not over and is not going to be over soon as the market would like it to be. "My colleagues and I are committed, are united." So that means the Fed really has very little opposition in bringing the inflation number down to their target. They are committed, unanimously committed, to bringing inflation down, not just down to the 2% target, but sustainably down to 2%, which Powell did not really elaborate on what that means sustainably. He said Powell. So here's the other side of his mouth, though. Now, so all of the stuff he was saying implied probably more rate hikes, at least one more, and the rates were going to stay higher for longer. Even the most dovish Fed governor is now talking about no rate hikes until maybe the end of the year next year. But here's Powell. He said the run-up in bond yields could mean the Fed is done tightening. What a crock, man. Okay, so the treasuries between the government flooding the market with trillions of dollars of treasuries, China dumping treasuries to try to salvage their own currencies, the treasury market flooding the bond market with product. Okay? Now remember how the world works, guys? It's all about supply and demand. When there's too much supply, prices come down to match the demand. When there's too much demand, prices go up, right? Supply and demand. Well, the U.S. government is massively smashing supply. At the same time, there's uncertainty in the bond market because yields have been gyrating all over the place. Nobody wants to buy a bond and take a capital loss on it right out of the gate as rates continue to rise. So, the government talking out of both sides of its mouth. So what? Bond yields mean the Fed can stop? Really? He thinks, what is he saying? That these higher bond yields are signaling recession of some kind? Because that's what we got to have. I just say, what a load of crap that speech was. It did not give us anything really actionable. As always, just more confusion and less signal about what in the hell was really going to happen here, right? At the same time, jobless claims yesterday come in at 198,000. They expected 211,000. So jobs just keep coming in hotter and hotter. Man, let's face it. Now, these are not, I'm guessing, $500 an hour jobs. But anybody that wants work obviously can find work if they truly want to. Wage increases have been slowing down and less people have been quitting their jobs, which is interesting. At the same time, there's more demand for labor. I tell you guys, with all of this stuff coming down, so now you got inflation numbers still high, right? And not coming down. Went from 3.2, 3.7, 3.7. Not good. You got consumer spending through the roof. Consumers willing to take on more debt even at higher rates. You got jobless claims falling, and you got job market super hot, wages going up. Well, what do you do about that, Powell? What do you do about that, Federal Reserve? It seems to me like they want to have it both ways. They understand the need for higher cost of money, but they don't want to be the one to push the button and cause this recession because there's going to be hell to pay for it. But sooner or later, they're going to have to sack up and do it. We'll see how long it takes. We'll be here talking about it. And finally, before I go today, guys, just a quick note on China. We know they're having a lot of trouble in their country right now with their rate so much lower than the dollar rate. The yuan really struggling, having difficulty against the dollar. So China trying to strengthen their own currency by selling and dumping U.S. assets. $21.2 trillion just last month. So China dumping treasuries, stocks, whatever else, U.S. assets, trying to prop up their own currency. At least that's what I think. Or is it something else? I'm guessing the bonds that they're selling, they're taking a pretty good haircut on those bonds, just like Japan did back in the day. And I'm sure China learning some hard lessons here. Anyway, guys, that's it for the day and the week. We got another week of crazy next week as we come up, wrapping up this month. We'll be here to bring you guys the gory details. P.S. I will not be here on Monday. We'll pick up the week on Tuesday. I apologize for that. I got a conference I got to attend. I got continuing education coming up for my licensing. I got all kind of fun stuff, but I'll try to be here every day to bring you guys the news you need. Everybody go Have an awesome, great, relaxing, fulfilling weekend. Spend time with people you love and people you care about, your friends. Get away from this madness for a couple of days. Relax, be a human being, and enjoy yourself. We'll be back on Monday to bring you guys the news you need. Until then, guys, have a great weekend. Thanks.